$430 million. That is the documented sum Mike Tyson earned across 2 decades as the most feared athlete on Earth. By August 2003, court records showed he had exactly $250 left. The money did not disappear in one catastrophic moment. It was extracted by a contract that handed away 33% before a punch was thrown, by a promoter federal records suggest took as much as 50% after phantom fees, and by a lifestyle that burned the remainder at a rate no human being could sustain. This is not a story about bad luck. It is a story about architecture, the precise, documented structure built around one man that made his bankruptcy mathematically inevitable long before he ever stepped into the ring as champion. Michael Gerard Tyson was born June 30, 1966, in Brooklyn, New York. By 1980, he was a juvenile delinquent inside the Tryon School for Boys Reform Facility, where counselor Bobby Stewart recognized something in the 14-year-old's aggression and connected him to Cus D'Amato, a 69-year-old trainer who had already built one heavyweight champion in Floyd Patterson. D'Amato became Tyson's legal guardian, surrogate father, and architect. In 1984, when Tyson turned 18, D'Amato's partners, Jim Jacobs, a handball world champion, and Bill Caton, a commercial producer, formalized the arrangement with a management contract. The terms: 33% of all Tyson earnings inside the ring and out for 7 years. That single contractual clause would eventually redirect an estimated $141 million away from Tyson before a single championship punch landed. On November 4, 1985, Cus D'Amato died of pneumonia at age 77. Tyson had not yet won a professional title. The one person in his orbit with no financial interest in his earnings was gone. Jim Jacobs died of leukemia in March 1988, a death he had reportedly concealed from Tyson while arranging for his wife to receive a percentage of future purses. With D'Amato gone and now Jacobs gone, Tyson stood at the peak of his earning power with no trusted intermediary. Don King stepped in. King's promotional contract entitled him to 30% of Tyson's earnings, a rate the Nevada State Athletic Commission's own rules technically prohibited for promoters. Court records produced during Tyson's 1998 lawsuit allege King went further, charging consultant fees, training expenses, and miscellaneous costs that functionally elevated his take to 50% on select purses. The June 1988 fight against Michael Spinks generated $20 million in 91 seconds. Under the King structure, Tyson's documented share of that purse after promotional and management deductions was a fraction of the gross. By 1998, Tyson filed a $100 million lawsuit against King alleging embezzlement and contract manipulation. The case settled in 2004 for $14 million. A figure that itself indicates the scale of what was conceded. The documented expenditures are not exaggerations. Tyson owned a 52-room, 21-bedroom Connecticut estate with a nightclub, cinema, and indoor pool, later sold to rapper 50 Cent for $4 million, a fraction of what it cost to maintain. He owned an Ohio mansion housing Bengal tigers, for which he paid $70,000 per animal and reportedly $4,000 per month in care per cat. He paid $2 million for a bathtub. Court-filed expense reports from the bankruptcy proceedings record monthly personal spending that exceeded what most Americans earn in a decade. In February 1988, Tyson married actress Robin Givens with no prenuptial agreement. The divorce, filed on Valentine's Day 1989, produced a settlement Givens's own representatives have placed at $10 million, though the figure remains disputed. Then came Indianapolis. Tyson was arrested in 1991 for the rape of Desiree Washington, convicted on February 10, 1992, and sentenced to 6 years in prison, ultimately serving 3 years and 1 month. The ring earnings stopped. The fixed costs did not. Tyson was released from prison in March 1995. The comeback was financially promising. $25 million for a first-round TKO of Peter McNeely that August. Then $30 million for the first Evander Holyfield fight in November 1996, which Tyson lost in 11 rounds. The rematch was scheduled for June 28, 1997. In the third round, Tyson bit off a portion of Holyfield's right ear and was disqualified. The Nevada State Athletic Commission issued the maximum available penalty, a $3 million fine, exactly 10% of his $30 million purse, and an 18-month suspension. The license that generated his income was revoked. The expenses that consumed it were not. By 2002, Tyson earned $103 million for the Lennox Lewis fight, the largest single-night payday of his career. He lost in the 8th round by knockout. Court documents filed the following year would show that even $103 million, arriving on top of everything before it, was not enough to close the gap the architecture had created. The Chapter 11 filing landed in U.S. bankruptcy court in August 2003. Initial listed debt, $27 million. By the close of proceedings, court records placed total debt at $4 million. The reconciliation of $430 million in documented career earnings against those numbers produces the following. Management fees at 33% represent approximately $141 million, redirected before Tyson controlled it. Documented and alleged promotional extractions by King, settled at $14 million, but alleged at $100 million, account for an estimated $50 to $75 million across select purses. Tax obligations on gross purses consumed a further substantial share. The $10 million divorce settlement, the $3 million Nevada fine, real estate losses including the Connecticut mansion sold at a fraction of maintenance cost, animal care, personal expenditures documented in court filings, and the $4 million in final listed debt close the ledger. The point of no return, identifiable by forensic accounting, is March 1988. That is the month Jim Jacobs died, leaving in force a management contract co-signed by Jacobs and Bill Caton that continued to extract 33% from Tyson's earnings, while Don King simultaneously moved to capture the promotional layer. Two structures compounding with no counterweight. That is the documented architecture. That is the date. The recovery is documented. Tyson co-founded Tyson 2.0, a cannabis company with projected annual revenue exceeding $60 million as of 2025. His podcast generates licensing and sponsorship income. In November 2024, Netflix broadcast his fight against Jake Paul, a reported $20 million payday. Accumulated across these income streams, financial analysts estimate Tyson's net worth at approximately $30 million by 2025. The structures governing these ventures are materially different from those governing his boxing career. No 33% management clause, no promotional entity extracting half of gross purses, no compounding debt from fixed costs outrunning suspended income. The $30 million figure is not a restoration of $430 million. It is a different number, produced by a different architecture. The forensic record is complete. Case closed. Next case. The documented collapse of an NFL franchise worth $2 billion, and the single lease negotiation that made the loss irreversible.